is Friday afternoon, 4:14 p.m. and it is time for the cash out. That's right, the cash out. I said I would have different videos posted, at least one on Monday, one on Wednesday, and one on Friday. Unfortunately, I accidentally forgot Wednesday because I was making chicken wings, African hot wings, my specialty, but we'll talk about that later. All right, so this is how we're going to get it started. We're going to start from the top of the list from our picks on Monday. That's from the 24th, right? So a couple of these things we had already cycled in our pool from earlier in the week, right? One of those stocks that we had that was a constant repeater was AKS. So AKS, if you were in it on Monday or the previous week, I think from the weekend, I'll have to double check. You could actually look at some of the previous posts. AKS at that particular time was in at 446, right? So let's say you decide you want to go all the way to the 24th, which is when that video posted. Time traveling. There we go, time traveling. Bam, 24th. Okay. That's the 25th. So the 24th was at late night. So if you got in that next morning at, I don't know, 7:30 pre-market, whatever the case, and kind of rode that out, you kind of looking at it like, oh man, wait, I tried to hold this and I kind of got into a particular place that wasn't that great. Well, I understand you might be confused, but guess what? We talked about what my strategy is. I'm a short squeezer. I like short squeezes for two reasons. One, I get a quick little pop, and then I can ride it down the rest of the way. So I'm eating on double sides of the stock, okay? So we know on Monday, AKS closed out in that 421 space, right? $5.21 or what have you, okay? Let's see, why do I keep clicking on this point? Let's just do pan. That may be a little bit better. So at that particular space, we had a pop all the way up into the early parts of the market, 9:30 at 575. So that, of course, that was a 50-cent gain, and we know that because we talked about that briefly. But guess what happened? We had a retracement all the way down into the next day of closing at 520. What's that? 527. And then, of course, if you held it, or if you held from that short at 575, okay, you caught another spike back, and still a further retracement. So all the way down to a full 100% retracement at 489. Even if you still said, you know what, I'm going to stay in AKS from 521 and I'm going to stay until 553. Even I'm going to ride these spikes out. You still are up a few points, actually about 30 cents here at that particular time. If you sold off some, came back to its next point of resistance or support rather, which is at 532, which is still 10 over what the original price was if you got in on that Friday. So what you see here, these things that I'm using, they're called Fibonacci retracements. And Fibonacci retracements are a good way to determine support and resistance. And we talked about support and resistance and the bounce videos and earlier on, as far as our introduction. So if you have any questions, retrace to those videos and you can take a look. All right, so we go on to the next one, which was, let's go to that list real quick. AMX. AMX was also another chart that that was pretty interesting as well. So let's say AMX we talked about on the 24th as well. On the 25th, you had a nice quick pop to 0-point retracement at 521, which we said, hey, guess what? It's going to hit 512 and 510, do a retracement, move up to 515, then back where it's going to hit mejor resistance. That was supposed to be major, but hey, I didn't type it right. So it hit that resistance, it tested it, and fell all the way back down. Look at that. Consistently for 3 days, it was on a 3-day fall, free fall. So from 1222 to 1170, I think that's what, 50 plus cent or 20 plus cent, maybe 50 cent total. And then boom, 1319. Crazy. That's the cash out, baby. That's the cash out. We're going to the next one. We're going on to the next one. Again, I am a short squeezer. Your strategies may be a little bit different. We're not talking about my strategies right now. We're not talking about any strategies. We're just doing the cash outs from the picks that we had on Monday night just to see what we had and what came to play. All right. So we had Momo, which was another stock that we took a look at. Momo was an interesting play because, again, Momo was a true support and resistance stock, right? Areas where you want to play it on support and resistance. So on the 24th, we posted it. Actually, that's the 21st because Momo was, I think, was in one of our other little things here. This was over the weekend. So you got that Friday and then that Monday, which was 24th. Bam. So at the end of the day, what was that? 24. We said Momo was going to trade at 26, at 26.61, and then just above a consolidated area, right? So that's the 25th. Let's go. That's on the 25th. Let's go 24th. That's the end of the day, the 24th, right here, right? Boom. Oh, there we go. Just above consolidated area, it's going to hit 27, and then guess what? It's shortened. It's back down to 25, 100% retracement. So from 25 down to 25.90, a little short retracement back to 26.24, and then a full retracement back to 25, and then a retracement back up to 24, and then back to 25 and some change, or 26 and some change. So one of the things you see here is common. What goes up always comes down, and what goes down always comes back up. And it's using support and resistance helps you find out exactly where that goes, or what areas to expect a bounce off of, a bounce for that particular stock, and especially with regards to the price action. So if I had to go back in time to the 19th or earlier on in the month, you could see the support levels here. You could see the resistance levels here. I'm sorry, the support level here and the resistance levels up here. You can see where these areas could be significant to making a decision on where you want to get in on your stock. So even in this consolidated area here, if you said, okay, well, look, I want the price action on this particular stock to not be identified until it hits this area or past this area. Well, of course, if it breaks out past that area, that's called a breakout. So now that stock is taking off consistently. So even if you got here at 24.67 and rode it all the way up to 20 for that day, rode it all the way up to 25 and some change, or you held it and you kept riding all the way up to the high of $27, that's still a good thing. But you understand why you did it, and you understand the reason that you needed to do it. I'm not here to explain why you choose a particular stock over one particular area or one future over another. It's all about technicals and the basic technicals. I mean, you definitely can say, okay, we have this, we have that, but if fundamentals are a part of it, you're not reading the chart. You're taking the word of the newscasters or the forecasters of the reports. That's true technical trading, is when you get truly involved in what's in front of you. Trade what's in front of you, not what you want it to be. Last one on the list is PI, which is Polar Industries Incorporated. On the 19th, we talked about this stock. We really did. Look at that. From 77, it hit that consolidated area as we knew it would, right? And we talked about it again on the 24th, which is actually right this day here. Well, actually, I'm sorry. Yeah, we're 24th at. There we go. So at the end of the day on the 24th, we looked at a nice pop-up, actually. I think I even wrote about what it was. So what did we say? 81.65 showed up on Sunday's video from the previous Friday, and then up from 79 from the previous week. Well, guess what, big dog? That's where we up from. We up from this area right here. Okay? Looking for resistance to test in this area and expect to move up past 81.91 to 83 if it doesn't fail. Well, guess what? It failed at 82.14. And that area from 82.14 is where you would have shorted all the way back down to $75. And you would have saw another retracement, and it would have went back to 80, and then a continued trend all the way back down. See, this particular area, when you see this missing candlesticks in between, those are called gaps. Gaps are for the skilled, They're not for the meek at heart. You have to know what you're doing at all times when you're dealing with gap trading or any type of gaps in your charting and stuff like that. All right. So that was Friday's Cash Out. I don't have any guest speakers, but if you are on Instagram and you like one of my stuff, any of my videos or posts, please send me a DM and we can actually get you on an interview and we can talk about your products that you have available on Fridays. Thanks a lot. Have a good weekend. Be safe. Have a safe with Thanksgiving. Not yet. Anyway, have a good weekend. I'm in the sky like all the time, and now it's no layover.